Hello, a very warm welcome to you. I'm Sage, you're watching The Buzzing Trends by Kalkine TV, and in today's episode we're going to be looking at 3 ASX-listed ETFs, or exchange-traded funds, that the investors are giving attention to this December. And an exchange-traded fund tracks an index, sector, commodity and other assets. It can be sold on a stock exchange just as a regular stock. And ETFs are in demand currently as they provide exposure to several high-potential shares via a single investment. So let's look at the 3 ASX-listed ETFs that investors have been flocking to this month. First is BetaShares Asia Technology Tigers ETF. And BetaShares Asia Technology Tigers ETF provides investors exposure to the top 50 technology and online retail stocks. Even as the regulatory issues in China may have weighed on the investors' sentiment, the long-term potential remains intact, as per the experts. And in the past 1 year, it provided a negative return of nearly 13% after fees. Now, in the last 5 years, the ETF gave a return of over 59% per annum to the investors. So let's check out what kind of investments underpin Asia's investing portfolio. Like all share-based ETFs, Asia is a fund that invests in underlying shares. So the ticker code for this BetaShares ETF is ASIA, Asia. And unlike an index fund, though, this ETF holds a relatively concentrated portfolio of 50 companies. And according to BetaShares, these are selected to give investors exposure to the 50 largest technology and online retail stocks in Asia, excluding Japan. So Asia's current largest holdings are as follows: the Taiwan Semiconductor Manufacturing Company, Samsung Electronics, Tencent Holdings, Alibaba Group and Meituan. The BetaShares Asia Technology Tigers ETF charges a management fee of 0.67% per annum. And next up, let's take a look at another BetaShares ETF, this time the BetaShares Global Cybersecurity ETF. The BetaShares Global Cybersecurity ETF provides exposure to the leading companies in the global cybersecurity sector. And cybercrime went up a level in 2021, with the media filled with countless stories of data leaks or hackers holding businesses to ransom. Unfortunately, this threat is not going away anytime soon. Rather, it is only expected to get worse. And as a result of this, demand for cybersecurity services and solutions is tipped to grow very strongly over the 2020s. For example, Statista estimates that the global cybersecurity market will grow from an estimated $217.9 billion US dollars in 2021 to $345.4 billion US dollars in 2026. That's quite a significant growth, and this could make it well worth gaining exposure to the sector. And one way to achieve this is with the BetaShares Global Cybersecurity ETF. So in the past 1 year, it provided a return of over 30% after fees, and in the last 5 years, the ETF gave a return of over 93% per annum to its investors. This increasingly popular ETF gives investors access to the leading companies in the global cybersecurity sector. This includes the likes of Accenture, Cisco, Cloudflare, CrowdStrike, Okta and Splunk. Lastly, the VanEck Vectors Video Gaming and Esports ETF. Another ETF to consider is the VanEck Vectors Video Gaming and Esports ETF. Now, this ETF gives investors exposure to a portfolio of the largest companies involved in video game development, esports and gaming-related hardware and software globally. And VanEck Vectors Video Gaming and Esports ETF gives exposure to some of the largest companies involved in video game development, hardware and esports. In the past 1 year, it provided a return of over 9% after fees, and in the last 5 years, the ETF gave a return of over 19% per annum to investors. And among the companies you'll be owning a slice of are Nvidia and game developers Activision, Blizzard, Electronic Arts, Roblox and Take-Two. In respect to the latter, Take-Two is the company behind the Grand Theft Auto and Red Dead franchises, whereas Nvidia is the graphics processing unit developer that sparked the growth of the PC gaming market in 1999. In addition, its GPU deep learning ignited modern artificial intelligence, which is the next era of computing. And VanEck points out that these companies are well placed to benefit from the increasing popularity of video games and esports. Conclusively, it can be noted that they come with low expense ratios and fewer broker commissions are compared to stocks and hence serve as a lucrative option for the investors. Thank you for your company on the report. That's all for now. We'll be back soon with our Buzzing Trends show, perhaps next week, to share the latest market insights with you. Until then, stay tuned with Kalkine TV for more stock, business and economy related hot trends. Sage signing off.